Alright friends, welcome to the stream. I'm sorry for the delay. There was some problem with the YouTube stream keys. And I'm your host Rakesh Kumar here, welcoming you for the webinar of 27th March 2020. The topic is trading patterns live and subtopic is descending triangles. So in this webinar, we'll be going through some patterns live using the GForex trading platform of Dukascopy. And we will be essentially using the widget which is available on the platform, and the name of the widget is pattern analysis widget. I'll show you this and also some examples of descending triangle and how you can trade them. But before we start, let us have a look at the risk disclaimer. It states that the future stocks and options trading involve a substantial amount of risk. Your capital is at risk. The losses can exceed the investment. The information is provided as is, and the user of the information assumes the entire risk of any use it may make or permit to be made. So without further delay, let's go and see the charts. Friends, before we start the descending triangle pattern, I want to remind you of yesterday's webinar where we had discussed ascending triangles. The descending triangles are nothing but exact opposite mirror images of the ascending triangles. Ascending triangles are formed with a slant line to the top side and horizontal line is on the top, whereas in the descending triangle you have a horizontal line at the bottom like this and a slant line at the top. Okay, the price keeps moving between these two lines for some time, testing these again and again, and eventually breaks below. And how to trade it we have already discussed in the previous video that we had posted today, but still I will try to do some recap here. When the pattern breaks on the downside, you have to wait for a retest here, and you have to check whether this horizontal support has turned into resistance or not. And if it has turned into resistance, then you have enter here and you have to keep a stop slightly higher than that, and you have to keep a target which is equal to the height of the pattern. Well, just to remind, you need a prior trend, one thing, then you need a horizontal bottom support, then you need a descending trend line, then you need retest of the support turned into resistance. Of course it happens after the break, and then you have to project the price targets. Well, that is all for this one, and now we will go through quickly some examples in the live scenarios. And you can also notice that if you test this one, if you keep an eye on this New Zealand dollar yesterday's trade, then it is now giving us fruits. If you would have entered here at 5911 or 5920 area, then it has already gone 30 to 40 points in your favor, and it has to go almost almost 440 points away. So you can still make a trade in this, but to be more sure, I will say that draw some support line, draw one short line here, and see this line is also broken. So it is a now win-win situation. You have to enter here, you keep a stop loss below this horizontal line, and your take profit will be almost 440 pips away, that is 0.6363 area. Well, that was for yesterday. I want to talk necessarily about the descending triangles today. So let us try and find some descending triangle patterns. Well friends, here you can see that it is very easy to find the chart patterns using this widget in the Dukascopy Swiss Forex marketplace. This is a patterns analysis widget, and you open it up. When you click here, something like this opens. Now there are three scan modes. First scan mode is all instruments. It will include all the instruments that you have subscribed to. Then second is current instrument. It will look into the history of the okay, on your screen if there is any pattern is there, then it will look for that. And current instrument history, if there is any pattern in the previous times, so it will open up in current instruments history only. But if we scan it in the all instruments, so all the instruments will be listed, and it can sort all these results that it has to show. Of course, there are a number of results. There are almost 50 to 100 patterns available now for us to trade. But if you want to sort it, we can sort them as per the quality, we can sort them as per the instrument, we can sort as per the date, as per the magnitude, as per the time frame, or as per the length. So I want to see them as per the magnitude. So when I click magnitude, it will change. Now I want 100% confirmed trades. Now one is I want descending triangle, so I want this one, and let us see what it has to show. Now there was a descending triangle formation here, but it broke to the upside, and since we are discussing descending triangles as the continuation patterns, so we'll just skip this result and we'll go to the next one. Although this is also equally strong pattern to trade on the reversal side. You see there is a reversal when there was a weekly downtrend, daily downtrend, and from here the price got reversed and it got the target which was approximately equal to the height of this pattern. But we want a continuation pattern. Okay, let us see one example at least of the continuation pattern. All right, this is a descending triangle pattern here. Let us see what it has to show us. It has also formed in an uptrend, so it is also a reversal. So we cannot see this one. See, we want a descending triangle to be formed after a downtrend. That is an essential, necessary requirement. If you remember what we had discussed, that for a descending triangle, you have to have a prior trend. So we will be looking for a prior trend here. See, it will show you a lot of patterns, but you need not to trade all the patterns. Okay, not good. So you can come to know from the pattern that whether it is worth this. Oh, okay, this is a very fine pattern forming on the monthly charts. Okay friends, I will say we will analyze this pattern at least for some time. Alright, what are we talking about here? Is that first we need a prior trend. So let us see if there is a trend. Okay, there are highs, lows, highs, lower highs, lower lows, lower highs, and we are expecting a lower low. So yes, the trend is there on the monthly chart. There is a trend. Then after we need bottom horizontal support, and do we have a bottom horizontal support? Yes, it is there approximately from 119 to 123 level, because it is a monthly chart. So you will find that the support varies in distance almost by $4 here. And the next, what you need next after this is a descending trend line. Do we have a descending trend line? Yes, we have a descending trend line, although there are only 2 touches to this line, and we need to see more touches in this one if possible. I can see one more triangle here forming. I can see one more triangle forming here. Okay, do you see this one? There is one more triangle formation here. So if this triangle breaks on the downside, then what happens? And there is a monthly. There are two descending triangles, two different descending triangles. Now if this triangle breaks on the downside, now if this triangle has to break on the downside, bigger one I am talking about, then the possible range is 13,132 will be the resulting pips movement. Do you really understand? This is 13,130 points almost. So in case it breaks on the downside, then 13,130 is huge. 13,130. So it will reach even less than 0. So that is virtually not possible. Actually not possible. But yes, this is the target as per the pattern. So we can expect the pattern to break below this and then eventually go to the dustbin. But this is how we analyze this market, okay? But if we cater only this pattern here, then we have the approximate target of 7,037 points, and in that case from here it will go to almost $54.43. So that is also a possibility. Now it is just a possibility on the charts. So what is the actual possibility? Yes, you realize it will break on the upside. Most probably it will break on the upside, and when it does, then first it will stop here and the next time it will stop here. So these are the possible scenarios in this one. Let us see another chart, another triangle, and it should be a descending triangle. Okay, we got on 10 minutes we got a descending triangle in GBP JPY again, and we'll go for that. Okay, there was a descending triangle and it broke on the upside, so we cannot take it. Then we have a descending triangle on gold, which we have already seen, but it is also not working. So I hope you got the idea that you have to use this widget just to have an idea of about where there is a descending triangle. Okay, this is with 50% magnitude. This is also a good descending triangle, but it was formed in an uptrend. So see, we want to trade descending triangle in a downtrend. Why we want it, I will just explain you in a couple of moments. First I want some descending triangle. These are all failed triangles. Let me see if it works. Okay, there is a descending triangle and it is still in formation. Yes, this is a classic example of a descending triangle, friends. This is just like a textbook. If you remember what we studied about in the textbook, that in case of a descending triangle you need a prior trend. So let us see if there is a trend in this one or not. First I will do it like this. Okay, then we see. Okay, here you can see there is a trend, downtrend is there. Then after we see what is the next point we have to see is the bottom horizontal support. Okay, let us see if there is a bottom horizontal support or not. We will just join this one. Okay, yes, we got the bottom horizontal support, and the next thing that we wanted to see is the descending trend line. Let us see if there is a descending trend line or not. Okay, this is a descending trend line. So we got 3 points correct. What is the next point? The next point is that it should retest support turned into resistance. So since this formation is still in progress, so we cannot go for this one, but yes, we can keep an eye on this pattern in the future, that what can happen. Most probably what will happen now is that, and if it does not happen then fine, but if it does happen, then what is the chance that most probably will happen? What will happen is that from here, from this point, as you can see there's a bearish pin bar, this thing will go down, 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 and then will eventually go up, 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 to test this place, as the new resistance, as it was previous support. And if you have studied any type of technical analysis, then you must have also studied that whenever a support is broken, it turns out into resistance. So I am expecting that this pattern, when it breaks to the downside, this support level, actually there is no support level, but there are always support zones, so I want to draw them by rectangles. So in this zone you will find resistance, market will find a lot of supply here, and that will be the point when you enter the market, and as the time passes the price will go down and down, and which will eventually fetch you a lot of pips. Now why I told you that in a couple of minutes I will explain you why descending triangle is always favored in a downtrend. Now from this example only I will tell you that suppose this pattern breaks on the downside, then your stop loss will be somewhere here. So you got it, your stop loss will be here, and as the time passes this pattern will be invalidated when the price closes higher than this falling trend line. So this pattern will be invalidated, or there will be break to the other side. So till the time our stop loss is above this falling trend line, we are safe, and with the time passing we can keep pushing our stop loss below this line. I mean, as the line goes, we can push the stop down, 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 down. So as the stop loss goes down, and eventually say after on 22nd of March, your stop loss gets hit in 2021, then also you will be in a profit because you will be entering somewhere here. But on the other hand, if this pattern breaks on the upside, and you wait for this area to enter in the market, and your stop loss would be in that case here, and as you go ahead your stop loss will go further than your entry, because the pattern will be invalidated when this trend line is broken to the downside. So your stop loss will go far away from your entry as the time passes. So you don't want to keep your stop loss away from your entry. That's right, that is not good for a good trader. So that is why, to keep a very good risk to reward ratio, we have to enter in a market where our stop loss is tight and take profit is 3% or more of the capital that we have to trade. Now why I say that 3%, 1:3, because say you have entered 10 trades. I always explain this is a very good risk management technique. If you have say taken 10 trades, and you have only taken those trades where you were thinking that if I win my stop loss gets triggered, then otherwise if I win, if I hit the target which I have pre-planned, then I will win 3% of my account, and if I lose, I will lose only 1% of my account. So your stop loss should be 1% of your account. I mean, you have to adjust your position size in such a way that if your stop loss gets triggered, you should not lose more than 1% of your account, and your trade should be you will only enter such a trade where you will get at least 3% if you win that trade. So if in the planning you see that okay, my stop loss is here and my take profit is here, and it does not fetch me 3%, So you don't enter that trade, you just miss the trade. You have taken 10 trades now, and you have taken, considering that if you win you will win 3% and if you lose you will lose 1%. My friends, it is a very good risk to reward risk management technique. The risk to reward should be minimum 1 is to 3. Why? Because if you win 3 trades out of 10 you will still be profitable. Rest is just maths, you can calculate. Suppose you lost 7 trades in a row, you will lose 7% of your equity. And if you manage to close 3 positions in profit by hitting the target, you will gain 3 by 3 equal to 9%. You will still be profitable by 2% at the end of 10 trades. And my friends, if you trade patterns, and if you take only trades based on 1 is to 3 risk to reward ratio or more, you will find that trades are coming with 1 is to 10, 1 is to 12, 1 is to 20 risk to reward ratio. In that case you will have to only win 1 to be profitable. So what my idea is that you take only a trade when you are sure that it is going to fetch you more than 3%. Like for example, in yesterday ascending triangle we were talking about. Now you see the stop loss is almost 50 points away, but take profit is 400 points away. It is 1 is to 8 risk to reward ratio. Okay, and here in this one I will tell you, if the pattern breaks on the downside, then the targets are huge in this case also. You see this has a height of almost 548 point. 548 points are near 11.8. so you will have 11.8, right? Okay, I mark it here. So in case you enter this market to the downside, I don't recommend entering on the upside. If you enter this market on the downside, like say at the retest of this place, and then your take profit target will be this, of course your stop loss will be above this line here. So you can see what will be your stop loss here. In this case, suppose you enter here after the rejection, from rejection from the resistance, even you enter say here, you have a stop loss of almost 123 points. So you will enter a trade if you have a take profit target of 360 points. 360 points. So it is more than 360. See, it is 420, almost 440. So you will still be much more, you will having a very good risk to reward ratio in this if you trade this pattern. Friends, focus on the risk to reward ratio. That is a very important feature of a good trader. Now there is a USD JPY in 10 seconds. Let us see what is USD JPY saying us on 10 seconds, if there is anything. Okay, there is a formation of a descending triangle. Yesterday we had traded one USD JPY ascending triangle, and today this is descending triangle. I think it will break to the upside or downside, and we will close this, we will take this trade. Okay, we will take this trade. This is the upside target, this is the downside target. Oh my god, the chart is moving so fast that it has broken already. Okay friends, it has already broken on the downside, and we are going to take this trade to the downside. Let us see. At the retest, if we get resistance, then only we will open a trade. Okay, we got a rejection. It is just a 10-second candle, that is why I am entering a trade right now. Okay, we have entered the trade at the rejection. Let us see if we can get 108.10 or not. I think we will be able to, but what is the height of the pattern? What is the height of the pattern? The height of the pattern in this case is from here. It is almost 14 points. So 14 points on the downside are less than 108.08. 14 points from this is 108.05. So 108.05 is going to be our target. 108.05 is going to be a target. So let us see if we can get our target or not, and our stop loss will be higher than this trend line. It's simple. So this is a live trade in front of you on 10 seconds. We have time. But it should not. I think you can all see this in on your platforms, and we will discuss it tomorrow also. Now I want you to tell me in your comments or in the chat that which pattern you want me to come up with tomorrow, and I'll discuss that pattern with you, and then we will do live trading tomorrow based on that. I hope you learned a lot about the technical analysis, technical pattern analysis widget, this one. And there is also one feature which is just next to this. This is called as patterns. You can draw the patterns. Okay, it's like head and shoulder. If you want to identify where is the neckline, it is very easy to identify the neckline. See, this is in case of head and shoulder. Well, all this and much more, the JForex platform is really nice. That is all from me today. I hope to see you tomorrow. Not tomorrow, but this is a weekend. I wish you all a very happy weekend, and I will you should to see you on Monday, same time on the same channel. Till then, see you. Bye bye. Take care.